Welcome to our second segment, and this is for week of September 7, 2024. We will look at the international markets as this is as a Wednesday. You see lots of red, and what we see here again, this is as of Friday. Look at all these candles. There's a lot of outside days, and we see lots of weaknesses, and only one we can see, like Belgium has been up, but other than that, there's really not many markets who were really immune. Singapore has done nicely, but other than that, we are breaking quite a few markets are breaking below their 20-day moving average. So I talked about the Japanese yen, and as you recall, with this carry trade and what happened with the Bank of Japan has decided, it's the time to start as far as welcoming the inflation in the sense of not inflation as far as the growth. And it's time to get the rates higher. So basically what has happened, we saw this in August. Then what did we do? We went down to our 20-day moving average, and we held it again. And now we are back exactly where we were. So if this continues, and you can see MACD is about to cross, then that will not bode well for the markets. Speaking of the markets, well, let's move into upcoming election. And we've talked about as far as, especially when it comes to emerging markets, developing countries, frontier markets, it's not just all about numbers and, quantitative sides. Politics matter. And here's Algeria's sham election. So it looks like, there's really a sham election going on in Algeria. The bureaucrats, they have disqualified all but 2 of the 34 contenders challenging the 78-year-old incumbent, which is Abdelmajid Tebboune. And at least one has been jailed. Hundreds of naysayers who 5 years ago led Hirak, which is movement and uprising, and they were against the power, as Algerians have called it. They've been rounded up. So this is the part that it mixture of politics, economics, and how we can become blindsided. So with all that, we can see there's only two. There's one socialist staying and one Islamist. They've allowed to be running with no chance, really. So here's a catch. Normally, Western government protests about North Africa's democratic deficit, but because of the hydrocarbons in Algeria, which is used as a substitute for Russia's, that risk of criticizing is pushed aside. So anyway, just want to share, there's a lot of meaning to this story. So I want to share that with you. Let's talk about some fun things. And we've been talking about wealth and talking about different nations. So we've talked about incomes. So let's talk about, in average, which country has the highest wealth and average individuals. So not surprisingly, we see Switzerland, Luxembourg, and Hong Kong. US is actually number 4 with 564,000, and this is thanks to obviously stock market and real estate. So when we look at the median, Luxembourg, Australia, Belgium, and when we go to regions, we see the Europe, the Middle East, and Africa. The average is 166,000 per adult. Asia Pacific is 156,000, and Americas is 146,000. So again, I hope this is something that it will hopefully make you to understand how these markets are working. Where's the money really? If you know, I mean, like Switzerland has the highest number of investors when it comes to private equity and venture capitalists. Switzerland actually ranks, when we mentioned about uh, in 2023 at 709, and it was at 685,000 in 2022. Speaking of Europe now, how about cost of living? Where is when you talk about relative to euro, where is most expensive, where is the least expensive? We just talked about, like, say, Luxembourg. Now, Luxembourg is 52% higher to average euro as far as cost of living, or to buy same product. So Ireland, believe it or not, is second. Now, the question is, where are the cheapest? And you can see Poland, a lot of Eastern European countries are included here. Romania is by far the cheapest, 46%. Bulgaria is 43%. Poland is 37%. And then Hungary, Lithuania, Latvia. So also interesting enough, Portugal is 14% lower than the average of euro. And Spain is about 6%. So Greece is 16%, Cyprus is 7%, and Italy is red in average, is -1. All right. Also, we look at the G20 countries, which is, there are a group of 19 countries and 2 regional unions that they count for 85% of the world economy. So it's important to know that who are their partners, who they are exporting, importing, and why. Again, when it comes to economics, it's important to understand the geopolitics, and it's also understand, when you want to invest in a country, look at their partners and how one partner's weakness can affect the other partner. So once we look at this, we see, like, in Australia, their largest export partner is China. So is Brazil, so is Indonesia, so is Russia, so is South Korea, so is Saudi Arabia, so is South Africa. So what happens is health of China plays a big role. Now, we look at the United States, we see Mexico, Canada, we've talked about this, Japan, India, and then China and Germany and UK, US is their biggest exporter market. So, I mean, Canada, what happens in the United States? It affects Canada, it affects Mexico. So it's important to pay attention to politics and what's happening. On the fun side, this was interesting. These are the football or soccer brands around the world in 2024. And actually, Real Madrid has taken over Manchester City. So Real Madrid is the #1 brand value at 1.8 billion, and Man City is at 1.72 billion. Then we go back to Spain, Barcelona, back to UK, Manchester United, Liverpool. Then we head to Germany, Bayern Munich, PSG, Saint-Germain in France, Arsenal back to the UK, Tottenham, and then we have Chelsea. So again, you can see so much money in these. And speaking of soccer and sports, how about the highest paid athletes? This is between May 2022 and May 2023. We see in soccer, Cristiano Ronaldo at 136 million, more than LeBron James at 120, and the Alvarez in boxing at 110 million, and then Dustin Johnson in golf, Roger Federer in tennis, and then Russell Wilson in football, American football, Lewis Hamilton, and are racing 65. So you see, when it comes off the field, Ronaldo is his own brand. LeBron James, the same thing. So I thought just food for thought to see how these are successful athletes, they earn their money. Now, as far as, again, that was in the middle of 2023. Forbes comes out, so I'm sure we will look at the 2024 soon. So let's talk about lessons. Again, the Fed is deciding what they're going to do with the rate. So I want to go to November, and basically what the November says, there's 100% chance that we will be actually at 50 basis point cut by November. Now, there is 75 basis point we could have at 53.5%. So, and then 17.6% that we could actually have with one full percentage. So regardless whether they do 50 basis or quarter basis, the market thinks, well, if they did quarter, they will do definitely a 50 basis in November. So, and even more. So they could do 50-50. So just a food for thought. So we talked about reinversion, that inversion has ended between the 10 and 2-year. So the idea is you can see every time there has been de-inversion, what that means, which we had a big invert, we go back to flat to positive. Every single time there has been a recession following it. And you can see these gray lines. It happened 2008, 2009. We had in 2001, and we go back to 1990. So every time you see these inversions, we've had a recession. So whether this is an exception, I don't know, but this is what history tells us. Also, another thing is, now this is very interesting. And remember, we had in December, they were talking about 7 rate cuts. So wanted to go back and see, since July 1990, the Fed rate cuts pricing at the beginning of the easing. So once they said they would be easing the markets, what they have taken into account, what they have priced in. It shows the amount of easing in basis point that was priced in by the market at the beginning of each easing since 1990. And this one, you can see the average has been 100 to maybe 125 in the past 3. And then we even had less than that. This one is a 225 basis point where we are in. So just a food for thought. I want to share, this is my workspace end of the day on Friday. And what you see, well, this is a sea of reds, right? So basically everything is down. But when we look at some of the sectors, you see that XLP, which is the staples, was down only 0.36%. And real estate was down only 0.07%. Healthcare was 0.34%. So they were basically more defensive, and under 1% we had the utilities. But when you look at technology, was down 2.8. And as far as anything in the futures market, of course, VIX and VVIX were up. We had cocoa just flat, and dollar, we talked about, slightly up. But then the rest are the 5-year notes, 10-year notes, 30-year bonds, and slightly natural gas. And these are some companies in the healthcare. You see consumer staples, Procter & Gamble, and Philip Morris, and then we had basically not much. Dollar Canada and yen was by far up. Talking about seasonality, and here's September. So this is since 1970, what September has been, all the Septembers. And you see one red, and that's September for the S&P return. And when we look at for the past 55 years, you see this is what happens to the markets generally. Now, I want to go a little further and look at the election cycles. So we talked about elections, talked about August. Usually election time is still volatile, but more positive. But this, we can see overall that in the past 5 years, this is how the markets have, or the past 5 elections, what they have behaved. The last 10 in a darker, how they have behaved, and the blue is overall. old elections. And this is what S&P has done so far. So you can see it has kind of followed, except this big, we talked about March, it actually happened in April, the downtrend. It has kind of followed. So here you see that September and October, they are not very pleasant on the eye. So, and this is where we are. Also, this week, what we saw was 25 of, this was not quite at the end of the Friday's closing, still markets were open another an hour and a half or so, but 25 stocks were down 10% or more. And you can see the Dollar Tree, for instance, was down over 20. Actually, at the end of the day, it was down 22%. You see is few of the companies, there was Dollar Tree and Dollar General. You know, these are for the consumers, you would think that should be positive, but that means they're not really spending money. And basically, that's a little heads up for the markets, what's going on. So, but there were quite few. I mean, that's a lot of the, 25 losing more than 10%. One of the culprits obviously has been that semiconductors have taken the markets wonderfully up. And of course, we talk about NVIDIA's of the world. But this is what happened. And when we look at it on a weekly basis, this is where we are, almost head and shoulder on SOX, but we are on a 50-week support. So, it hasn't happened since it broke above the 50 weeks on the beginning of 2023. Every time we've hit it, we've bounced back. So just a food for thought, I want to take a look at it. Also, I want to look at past 5 year seasonality for SOX. Well, for past 5 years, we've been negative. We had the 0 out of 5 years that has been positive. But also I want to look at it between the two elections, 2012 to 2016, what happened. And September, again, only 2 out of 5 years it was up. So seasonality also is not favorable, but this is crucial. So we want to watch SOX. Having said that, guess what happens? Now, what happens after the SOX drops 7%? The same thing if S&P dropped. This is what happens a day later, 1 week later, 1 month, 3 months. So you see in a long term, after the SOX dropped 7%, a year later, on average, they were up 25.6%. The same thing, NASDAQ, if it drops 3%, generally a year later, they're up. And when we look at all other periods, so with no drops, we see that after SOX 7% drops, and after NASDAQ, what happens again? So if there was all other periods, so basically I thought that was interesting. So let's talk about the gas prices. Now, this is going back to early 90s and where the gas price was, retail gas, nationally United States, $1 per gallon. And then, of course, you see what happened. And then in 2022, as you know, the gas price hit $3.95. So I want to show you, these are the gas prices every year from 1992 all the way to 2023, and this is 4. So 2021 to actually 2023, and so it was $3.51. But also I want to show on a weekly basis. So we are the numbers won't come out till Monday, September 9th. So nationally, we are at $3.29, let's give and take. And you can see where we were in February, where we were in January, and then, basically in April and June, we were actually at almost 4.8. So what is going on is we look at again the weekly and where we are now. So we had this big jump and then we came down. Well, this is California now. I mean, if you live in California, you notice, my God, the price is still not going down. I mean, the crude oil has been down. And yes, I mean, the regular is at 4.67, but averaging, I just showed, it's at $3.29, and here's 4.67. So, and why, again, the, the gasoline is a 12-month low, and we still not where we were, you know, basically even, a week ago and a month ago. I mean, we're still higher than a month ago. So, uh, the reason is obviously, well, first of all, California has this strict environmental taxes, and there's something called mystery taxes. So we always pay $1 at least more than everywhere else. But also September, October notoriously they're called maintenance months. So the refineries, they kind of close their refining, so the supply gets limited, and that's, gasoline price can go very low, but still doesn't affect that much of the price because there's not much available. So just wanted to clarify that. Last but not least, a little bit of tidbit is car insurance rates. Talking about things going up, they're up 18.6% for the last 12 months, and in July, and this is according to CPI. And that is marked the third largest jump, year over year across all goods and categories that CPI tracks. On the other hand, with gambling made as simple as downloading an app, which a youngster can even do that nowadays, billions have been wagered, and the total amount of bet, believe it or not, in January 2019, not long ago, right before COVID, stood at 1.1 billion, and now it catapulted to $14 billion the same month this year, and that's from the Sportsbook Review. Now, US startup failures jumped 60% higher in the past year as funds raised during the 2020-2021 COVID, the tech boom dried up related to that. So anyway, I hope that was helpful. With that in mind, we're going to move on to our third segment, and we'll talk about trade of the week. Thanks.